In the last few years, the shares and the bonds of emerging countries have had very interesting performances. And what will be their performance in 2013?
I think our expectations for returns in 2013 for emerging market bonds will be probably somewhere in the mid to high single digits. 2012 has been a year of significant gains. I think next year our expectations certainly would be more modest in terms of returns, but we still think that emerging market bonds will outperform most developed market bond markets.
Still investments in BRIC countries or in new countries such as South Africa, the Middle East, or Latin America?
Well, I mean, the BRICS has been a very popular place for investors in recent years, but increasingly we see opportunities outside of the BRICS. Places not just like South Africa, but you also mentioned in broader parts of Africa like Sub-Saharan Africa, Turkey. Other countries such as Latin America, where we see a real good story. Countries like Peru, Chile, Colombia, which are investment-grade countries. So there's plenty of opportunities as investors to broaden our horizons into a number of different emerging markets.
So what are the prospects for bond investments in emerging countries?
We continue to see very good prospects for bond investors in emerging markets. Yields have been coming down in recent years. Spreads have been narrowing in recent years. But these are mainly due to the fact that these emerging countries are increasingly now investment grade. Investors recognize both the attractive yields, but more importantly, the reduced volatility in these countries. So therefore, return expectations are declining. But most importantly, we believe the risk and the volatility are declining as well in these emerging countries. So I guess, to summarize, we believe that return prospects in these emerging countries still remain very healthy.
Is it better to make direct investments, or is it preferable to enter into these markets through investment funds?
It's better for investors in order to access these markets, to go directly to an investment fund. The reason why is that these bonds that we invest in are not as easy accessible on a stock exchange as a big equity company would be in an emerging market. So therefore, we believe the best way for investors to get exposure to this asset class is through a fixed income fund. And through a fund manager who's been doing it for a long time, who has the resources to look at a large group of countries, a large group of companies, and can provide the research, the analysis that's necessary in order to make these informed investment decisions.